Japanese inflation off the charts, Austin. So we know that the pandemic had all kinds of factors in play into what we're seeing with inflation, with supply chain. So we got that. We know Putin, at least recently, has something to do with it, but only since the invasion, maybe some for the buildup. How much do you think the Fed, we're having some of our guests draw a direct correlation between what the Fed's done with QE and bond buying and accommodation and staying at zero with not only the Fed, but fiscal spending. How much of that is what we're seeing now in inflation, and how much is just the pandemic reopening, supply chain, and energy, things like that, Austin?
I've thought that the majority was supply chain and pandemic. And if you look at the producer price index inflation in China, that's 15%. In Germany, that's 20%. In the U.S., that's over 10%. That suggests that there's a major supply chain component. I have been surprised that the Fed stayed literally at zero, moved into emergency mode when the economy was in collapse, didn't return to something like normal as conditions return to normal. But that said, when there's a supply chain component and Russia began massing troops on the border of Ukraine by December 3rd of last year, prices were up 40% for oil before the invasion began. So on the energy side, for sure we've had a supply shock, and you don't want to over-tighten into the face of a supply shock. I mean, we learned that in the 70s. So the Fed is in a tough spot.
All right. So, Tyler, see, with you guys, unlike you're on the right side of our debate today, but unlike the politicians, both of you guys are actually trained in something, in economics. So just like Austin wouldn't just take the Dem side, I don't expect you to take the Republican side and say, oh, my God, Biden this is all his. He owns this. He totally owns all this inflation. I'll bet you won't say that, will you? So this is going to be a crappy debate.
Well, what I will say is I would like to defend our supply chains and our ports for a minute, because I think it's important to remember that in March 2021, demand for goods in the United States increased 10.7% month over month. That's a 240% annualized rate of increase in 1 month. And it was in response to a $1.9 trillion stimulus bill in March 2021. And our ports in 2021 handled a volume of imported goods that was about 20% above pre-pandemic volumes. Usually when we see both price and quantity goes up, that means it was a demand shock. And so I think our ports were doing a pretty good job at handling an unprecedented demand for goods in 2021. And yes, we've seen inflation rise around the world, but it has risen much more in the United States, at least pre-Ukraine invasion. It has risen much more in the United States than in other advanced economies. In fact, if you look at a harmonized index of consumer price inflation in the euro area and the United States, the increase in the rate of inflation in the United States was about 3 times that in the euro area since February 2021.